What's up everybody, welcome to Money Management channel. My name is NG and today I'm gonna be doing an update on natural gas prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we caught this movement to the upside that potentially brought us about 10.3% of the profits. Then I will continue with the fundamental news, and I will show you that the sentiment of the market, of the natural gas market prices is not so positive. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point, and I've told you that on BOIL, on ticker symbol BOIL, and by the way, I chose this ticker symbol because it is a leveraged ETF based on natural gas prices. And this price action was quite good in terms of its movement to the upside. It had a decent structure and then the retracement. And I've told you at this point that if you are quite a risky trader and if you can properly manage your position, you can enter your long position right here with anticipation to break this previous swing high. And your stop loss should be at 0.786. First conservative stop loss should be right here, and the major stop loss should be at this point. And as you can see, we didn't hit none of these stop losses. And from this point, we had about 2.78% of downside potential. And to the first price target, we had about 11.43%. This means about 6-to-1 risk to reward ratio is quite lucrative from the trader's standpoint. That is why you potentially might be already up for about 10.2 or 10.3%. So, in my technical analysis, I will show you what should we expect next, but for now let's continue with the fundamental news. And first of all, let me show you that the total sentiment on the natural gas prices market is not so good. Let me quote you this news that was published on oilprice.com on May the 12th, and it says, European natural gas prices are set for a 6th consecutive weekly loss. And let me quote you the bullets. European natural gas prices are on a course of a 6th consecutive weekly loss, the longest run of losses since 2020. A combination of weak demand due to mild weather and comfortable inventories have kept natural gas prices depressed. Europeans' benchmark gas prices have halved since the beginning of the year and are now just 1/10 of the August 2022 price. So, in general, we are in major downtrend, and the main reason of it is weak demand. And let me show you this another article that was published on Yahoo Finance, and it says Europeans' new energy problem. It now has too much gas. And let me quote you this. Europe has come a long way from the frenzied stockpiling driving up natural gas prices a year ago. As of May 9th, Europe's gas storage was full to 62%, and at the current pace of refilling, storage is expected to hit its capacity of about 1.138 terawatt-hours by late August, according to estimates by Morgan Stanley, and it is driving down gas prices. And definitely, this is one of the major reasons why we have so low prices for natural gas. And I have to say that the most recent spike was the result of this news. We are on barchart.com, and this article also was published on May 11th, and it says, natural gas prices little changed as Canadian gas production resumes. And here you can see that Alberta is on its way to re-establish their production of natural gas. But right here you can see that nat gas prices on Thursday initially moved higher as forecasts for abnormally hot conditions for the western US from May 15 to 19 would boost natural gas demand from electricity providers to power increased air conditioning. And definitely this is just a spike, and I have to say that it certainly has quite a good volume, but in general, on a greater scale, we are still not out of the woods. And let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, if you entered your position right here and you already up of about 10%, and it is basically fourth or fifth trade since the beginning of April, and all of them was positive from 3% to all the way up 17% from this point. Let me show you. From this entry point to this top, about 17% of potential profit, and none of them was with the losses. In worst case scenario, you probably hit the stop loss orders that brought you from this bottom about 3 or 4% of potential profit, and from this entry point about 4% as well. And definitely this is the sign that you can rely on my technical analysis as a part of your due diligence. So what should we expect next? Let's take a look on natural gas spot prices and natural gas futures. Right here, on my previous video, I've told you that we have to form the ABC correction, and we were somewhere at this point, and I've told you that probably we already hit the top of the B wave, or we are about to form it, and then we have to see the next the next leg to the downside. And as you can see, I missed because of this next spike, I missed the stop. And the bottom is pretty much double bottom pattern that was quite bullish in the short-term perspective. And this setup, I didn't catch this setup because I've tried to catch this ticker symbol, the BOL ticker symbol. But in general, we have a decent movement to the upside. The only concern is the volume. On natural gas spot prices, we don't have increase in volume, but on natural gas future prices, we have it, as you can see, and we have pretty much the same structure. We have the top of our B wave right here, and we have a breakout below the bottom of the A wave, and technically it is quite shallow C wave compared to the A wave, but it happens, and as you can see, we have this movement that broke the previous swing high. And what to expect next? Definitely for now we are on bullish side, but with the bearish sentiment for the market. That is why all of our long position from the technical standpoint might be quite valuable, but from the fundamental standpoint we are on quite risky side. And what should you do? If you entered your position right here, and if you already up for about 10%, you can basically book your profits right here, or you can set up your stop loss order somewhere on the positive territory. Let's assume that you also might have up to 3 to 4% of potential stop loss order. And let me show you that if we connect these two bottoms by a parallel line, we can see that the potential level of your stop loss order might be somewhere here, because on upcoming 2 sessions, I guess on upcoming 1 or 2 sessions, we might see the retracement that shouldn't break this range of support in order to stay bullish. And for this case, definitely you can reset your stop loss order somewhere here at 2 maybe percent, and you will be on quite safer territory. In this case, your potential stop loss order might not be triggered, but on the other hand, you will be on the position that you entered right here. And definitely if this asset goes higher, and from the technical standpoint we still have this previous swing highs to break, it is the top of $3.79 that was set at the very end of April, and from the entry point it might be up to 36% of potential profit with the tight stop loss, and probably you already in green. That's why it is not so risky from the technical standpoint, but fundamentally we have quite good chances to hit this range. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys until next time. Bye!
I got the cash in the bag, stadium packed, born a rock